Alright guys, welcome to this episode of the Ichimoku system for advanced. We're going to be going through some charts rather than going through the trade stuff, so that way I can focus on writing more on the charts. Now you already have the basic knowledge of what the tenkan does and the kijun does and the chikou span behind it, and you got the Kumo cloud A and B, and so you already understand the grasp of the basics. So now we're going to start working on more advanced stuff so you can see things coming. So right now we're going to be talking about the cloud itself. So here we are. We got it's the market in a range, and you see that the cloud is coming up. So it's a good thing that the cloud will provide you some kind of a support. At least that's what you're looking for. But in this case, the candles went inside. So that pretty much tells you that this will not be going up anytime soon or down, because the cloud is always indecisive. It doesn't know what it wants to do, and it's bouncing between the A and the B. That's what we call the green one is the Kumo cloud A, Kumo cloud B. So this is called indecisive, because anything on top is bullish, anything on the bottom is bearish. So the cloud is telling you where the dividing line is between the bulls and the bears. So if it's in the middle, it's indecisive. So you have to kind of wait and see what it is that the market wants to do before you jump in on there, because otherwise you're going to be caught, in a bad situation. Once it breaks out, like it does in this situation right here, it came out over here, then we have some kind of confirmation that it's out of this range. And what is it that it's trying to look for? Well, it's trying to get up to the upside, but don't forget that you still have this line that you have to break. Oh, that's not a straight line, but you guys see what I'm trying to say. So this is the line that we'll have to break to get out of before you consider this a buy option, because it can just turn around and bounce right back into the cloud and then play this game right here. So you really don't know. So this is where it gets caught up. The cloud shows you your supports and your resistance, and it lets you know when it's a good time to get in. So once it breaks above that and it closes, then you got yourself a run to the upside. Okay, so that's your cloud. Okay, and on this illustration, we're seeing that the candles are using the cloud as support. It comes down, it hits, goes back up, comes back down and hits, comes back up, as it keeps finding support on the cloud. So it really does help you a lot in visualizing what the market is trying to do. So it's still trying to stay on the bullish side of the market. It doesn't want to be down here, which is in a good way, because then you kind of can start thinking ahead if you want to start getting in. So once it starts to break out, you'll find out where the last support and resistance was. Sorry, my lines are not too straight. Once it breaks out of here, you want to make sure you keep an eye on your chicken span, because that thing will keep you from getting into trouble or jumping into the markets too soon. So as the chicken span is coming up, it's fighting to get through the kijun, and then it's hitting the candles, then it's hitting the tenkan. So you have all these things that are going through, trying to get through, which it can keep the market from sometimes stalling. So sometimes you see the candles are free, and you're like, man, what? It's in its way. Well, because it's going back. Remember, it goes through cycles, and this is where the chicken span lets you know if you have a free run. Once it clears that last resistance through here, then it can take off. Okay, and then the market starts moving, and then after it became resistance, it becomes support, and it starts keep going. So this is how you start seeing if you have a good run before you jumping in onto this area. Okay. In this chart, we see that the market is dropping, and the candles pull away from the tenkan, and the tenkan is pulling away from the kijun. So when you start getting these spread out really wide, ignore these two green candles for right now. Let's say the market is falling, and you start seeing this a wide spread. The market is going to do one or two things: pull back in, or it's going to stay in a range and wait for the two indicators to catch up to it to come down here. Okay. Most of the times, it always wants to come back to the tenkan. After that, it might come back a little bit more, but you at least you have this section of pullback that you can go and look to see what the distance is between those two. Okay, so it's kind of like a oversold indicator, or if it's on top, an overbought indicator, and it works just the same as your RSIs, your stochastics, your Williams percent Rs. Any of those indicators are doing the same thing that this is doing. It's letting you know when it pulls away from the tenkan and the tenkan pulls away from the the kijun, it is out of whack. And the market does not like being out of whack, and it wants to come back and be in alignment again. Like up here, everything is all, it wants to be together, okay? Because they like dancing around each other. And when they're spread out, the market doesn't like that. That calls your attention that even though we're in a bearish territory, let me clean this up. Even though we are in a bearish territory down here, you can see that it's letting you know that there's a good chance that this is done running or falling, and it's ready to go the other direction, because everything that goes up has to come down, and everything that comes down has to go back up. So then as you look behind, you see, well, what's back here holding this candle back? Or chicken span back? Absolutely nothing. This thing has a free run all the way up to here before it hits something. So this could be a good run up. All right. Okay, and here we see we're still in the bearish direction, and the market wants to turn around. So the candles start working its way up, and it hits the kijun area. And if you look back, the chicken span is hitting the candles. So it's going to hold that market back. So you can see that 1, 2, 3, 4. It took a while to break through there. Then it breaks up, and it hits the cloud. If you look back here, it's hitting the kijun. So it had to go through a lot before it can break through. And as soon as it broke through, it hit a cloud again. So then it got rejected, came down, found support, but then it fell through. It's trying to get momentum to get back up. But in the meantime, now the chicken span is bouncing in here. So you really don't have a clean shot until this gets past this. And even after the candles are free, look how the chicken span, let me clean this up. Look how the chicken span is holding it from running, because until it gets out of there and it moves out of this area, the candles ain't going nowhere. See how it holds you back? So it's always important to look behind you to see what's going on, because this guy will keep you out of trouble. Because you get into a trade now, and for some reason, which I've done this before, you buy right up here, and then you're making money, you're losing money. You're breaking even, you're losing money. You're making money, you're breaking even, and you're like, oh man, this isn't ever going to move out of here. And you rate it was just when you're ready to sell because you're getting tired of waiting. It's going to sit down here for a while, and then you'll be like, okay, any day now. So this will help you not fall for something that even myself I have falling into. The Ichimoku system keeps you focused on the market and not the market focused on taking your money. Remember, you have to be patient, and you have to let the market tell you what it wants to do and not jump the gun and assume, because that's how they get you. Okay, so for example, here we are, the market is falling, but look at the tenkan. It's right with it. It never really broke away from it. And so same thing with the kijun. It never did one of these where it stops and flattens out. It's just still coming down with it. So this is, even though it's falling, the signals are telling you that this is still going to continue to keep going down. Once it actually found a base, look at the kijun right there holding it down there. Also, once you get to this area, you're looking at some heavy cloud. The bigger the cloud, it's going to be some heavy pressure holding that stock down. So being able to get out of that is going to take a while, and if it does break, then you have a nice little run between the A and the B, but it takes a while to break out of something like that. Sometimes, stocks can be under for months and months and months before actually anything happens. Here's another example where the market came down way back here, and see how it separated itself? You got this gap, but for some reason everything came down to it. So not always going to bounce back. Sometimes it goes the other direction, and it took a day later almost for the kijun to catch up with it. So once it flattens out and it stayed in a range, now it's got that cloud coming, and it's just going to hold it there. So even if you see in a lower time frame that if it breaks above a certain price that it might run. If you look in a higher time frame and you got this big cloud sitting on it, it's going to be rough. I mean, that thing is going to have a hard time breaking out of that. You have to wait until it gets to this thinner area for the cloud to decide to come out of it. That's where it really finds its freedom. Okay, so that cloud really helps you to let you know it's like an elephant sitting on your stock, and you just have to wait it out or stay away from it. If you're already in it, wait it out, because obviously it's not falling, so eventually it has to get out of there. But if you're not in there, just don't even touch it. All right, let's do something a little bit more positive since we had all that heaviness of the market crushing your trade. This is one of my favorite moves. It's called a C clamp. And the reason it's called a C clamp is because I actually heard another trader calling it that. I really don't know where it came from, but it's really cool. It looks like a C. Okay? And what we're doing is, what you're looking for is for the candle to be inside of your tenkan. See, it's sitting right there. So anything else doesn't really count, but that when you see this and you got this one flattened out, this is called a C clamp. And then what happens is there's kind of like nothing is holding it, and it likes to spring back up to it, to the kijun. So this is one of my favorite moves, on the lower time frames, is to get into this, because the next candle will end up doing something like this. Where am I? It will be maybe a green, and then it'll jump to a red going down, and then it'll have a red, and then it'll just spike. So it's trying to get to it, but it'll play this little game of going back and forth of what it wants to do. Or lately it's been doing a lot of where the market starts up here, but then it closes down here. Then it jumps up here the next day, and then it closes down here. And so it's always pulling these down things. So it looks like nobody can get in it because it's always falling, but every day it's going higher. It's just doing it in reverse, so it's skipping every day a little higher. But when you see the C clamp, is one of my favorite moves to get into on the daily. Sorry, I should tell you, this is on a daily chart. And then I get in a smaller time frames, the 30 minutes and stuff. And but it has to sit right inside that C, that candle, for it to count. All right, now let's see how much you retained. So here we have the market is moving up, and we're above the cloud. So that means it's what? Bullish. Yep. But then it broke away from the tenkan to kijun. So what does that mean? It's overbought. Exactly. And if it gets overbought, what does that mean? Fall. Comes back to it. In this case, it really fell. It went way past that. So this is one of the weird examples. Usually it stops around this area, comes back to it. But in this case, it decided to come back. So when you see that the candle gets away from especially from the tenkan, because tenkan always likes to stay close to the candle. If you see that it broke really far away from it, unless it's got some consolidation going on up here that it will wait for it, you're going to have a pullback. So you have to be careful with those. So it's letting you know that's overbought on that area. Okay. And then you got, let's see. Yep, it starts to spread out over here again. It starts to pull away from the candle. But instead of falling, the tenkan comes up to it, and it kind of gives a support. And then it decided that it didn't want it, because the market, it's always doing the opposite of what you want it to do. It's like these things it helps you gauge it. So if, let's say, for example, you saw this and you say, okay, I would like to get in here. Oops, let me break in here. And let's say you find the support, and then the candle decided to go underneath it. Well, now that support became resistance. So if you were thinking about getting in, or if you were already in this range, it's time to get out once it dropped below it, because it's letting you know that your support turned into a resistance, and it's going to be fighting it. So it's like it's giving you a heads up that that's it. And if you got in up here, then it's time to get out because it broke below it. So that way it's just take the loss and get out, because the more you sit there and you wait for it to see what happens, your loss gets greater. And then there goes your account. All right. All right, so now you're ready to see the bigger picture. So we were zoomed in, we saw a small area, but now you can see the bigger picture, and just by looking at it, you can tell what the market is doing. Okay, so I'll give you a second to look at it. And when you start looking through this, you start seeing that's in a big range, okay, because it was up here and it's coming to test it again, and it went all the way down there. Okay, and then it had this little range here. So now you can kind of see what it was doing. Because how do I know it was in a range? Well, there's the cloud. It didn't go anywhere. It stayed inside that cloud. It was underneath it. It was above it. It was in the middle. It was above. It just stayed there. And then it tested this high. Then it came all the way down, tested this low, and it went right back to testing the high again. The cloud is letting you know where the middle ground is. Okay? So we're just going to slowly digest this. Alright, so you got the cloud in the middle. It went from not knowing what it wanted to do, became bearish. Okay? It pulled away from the tenkan, and it snapped right back. You look to your left, there's nothing in its way for the chicken-sen until it gets to this area. So it ran, and then it got stuck because it had to get away from those candles. And then it got stuck again with the tenkan-sen and the kijun-sen. So it's like it's telling you the story of what is it doing. That's why you got this little consolidation in here. And then you got the cloud also hitting it. So you got this guy hitting it, this guy hitting it. It's all happening at the same time. So it's not really going through. It's trying to, but it's having a tough time. Finally, when it breaks through, it hits the cloud back here on the chicken-sen. And it's trying to get out of here. So you're seeing how it's taking its time trying to get through all this. It's a big mess. It's usually very hard to get out of it, but once it gets into the bullish territory, then it has a free run to move faster. Okay, it gets very what do you call it? Congested here, but once it gets up here, it starts to run because there's nothing in its way. All right, so the market finally got out. There's your resistance and support areas where it hit before. It came here, it tested it, it rejected it, hit the cloud. Look back here. The chicken span is fighting with that as well. It gets back up. It goes through. Once it breaks through the resistance, it became support. Came up, see it? Came up, came back down, found support, and then it just took off. Now, the things to look at that are in your favor before you look at this mess. Right here you got the tenkan-sen and the kijun-sen, one's above the other, which is good. That gives you a green that's good. Then you got green future, which is great. Then you look back here and you're like, oh, I got to run through three things here. Candle, tenkan-sen, chicken-sen. So this is not a good call yet. So then you wait. Wait till it gets a little higher. Because it might just hit here and bounce right back down and continue to the downside. So then we go up here. We'll see it breaks through. It gets support. But you're fighting again, chicken-sen. Even though you have a great green future, you still don't have a good go. Okay? Also, you got the tenkan-sen below the kijun-sen. So you got two no's and one yes. So still not a good stock to get into. You guys seen how this gets put together slowly? Then you got support right here. Tenkan-sen crosses above the kijun-sen. Look back here. It's above the candle, barely. It's barely above that candle. And then it finally rides it up. But once you break out of this area right here, then you're really free. So, but this area kind of gave you the three green goes, but this still could have hold you back. In this case, it worked out in a candle in direction favor. and there it went. Okay, so this is how you look at the bigger picture. Also, if you go back, let me clean this up. You can see it's in a big range, up, down, up, retesting. So if you already figure that it's going to try to come back to retest that high, then it's not too bad to get in here if you know if you see it. But it's up to you, because it might reject it and stay down here. So it's harder to predict the future with the market. All right, and here's another example. So if you look at the big picture, what is it that you're seeing? Well, the bias is to the downside. That's just right off the bat, it tells you that there's no bullish tendency for this trade at all. So anything that you try to go long on this stock is going to be very short-lived. It's going to be very short. It's not going to make it too far. So you have to have that in mind, that if you are trading, that you want to get in and get out. You don't want to be staying through this, because you have to fight through so many things, and you can easily lose very quickly any profit that you're trying to make. Because when you're working with a stock that's going down, you're looking for these regressions, for the market to come back for you to make your money. Once it goes back up, it will continue doing its trend. So these are very short-lived ones, but you can get a lot of money out of them if you hit them right. So if you're looking at buying long on a market that's falling, you just have to be aware that it's going to be a very short-lived trade. You're in, you're out, you're done. Here's another example. So now we have to figure out what is it that you're seeing, because the system is designed for you to be able to just at a glance tell what the market's trying to do. Okay, so let's say we're coming in from this area. Well, we know, because these guys, the chicken spans, is great to help you with marking your resistance and support lines. So we know it has to break. Oh, my line's not that straight there. We know it has to break that area. Okay, so and it's down here somewhere. All right, so we're dealing with up here. So here it comes. So it's doing its thing. It broke above it, but it really fast came back down. So it's staying inside its range. So we know that it has to break this area, and then it made this new high. So now you got a double. You can do that if you want. Okay, so all this is just being in a range, but you can capitalize in a range if it wasn't stuck in all this cloud. If this was in a different location, you can catch these buy down here, sell up here, buy down here, sell up here. But when you have all this in the middle, it might not be worth it, because it's kind of like it's a lot too many things you're going to get tangled up with. So here is letting you know that once it breaks this area, then you got yourself a free run. So once you're here, you look to the future, you have a green future. You look to the past, nothing is in its way, and there it goes until it becomes a new area. So this kind of tells you what is going on with the market. All right, and here we'll make this one our last slide, so this doesn't get too long. So at a glance, what do you see? You see that it's in a range. My super straight line there. Sorry about that. All right, so the market's down here, and you're trying to figure out what you should do. Well, let's see. We have a red future, which is not good at the moment, but you do have a tenkan-sen, kijun-sen cross, which is a good thing. And then you got your chicken span that's about to run into some things. It might come through here clean, or it might not. But either way, you're looking at a cloud that it's about to hit. So there's too many things that are in its way right now. Not to mention you got this resistance that is coming up. So you have resistance, you have a cloud, you have a red future, you got stuff in its way. This is one of those stocks that I would kind of wait, because if it decides to come back in and it finds support, then you might have a nice little clean run that will try to do the, buy down here, sell up here type of situations, because you see that it did it before. So it might do it again, but not until it breaks this area. This is the one area that needs to get through. Okay, so it kind of at a glance is letting you know what the market is doing before you jump in. All right, guys. So hopefully this will help you guys. You have to make sure that you learn to be patient. Lots of patience if you don't have it. Take your time. Let the market tell you what it's trying to do. Don't assume. Draw your lines. Make sure your resistance lines. Get your support lines out there. See what the cloud is telling you. See what the market is telling you. Let these things talk to you and make a decision based on what you see, not what you think is going to do. Okay, guys? So hopefully this will help you guys out. I'll see you guys in the trading room.